To today's edition of the London Session Open. Today is August 30th, 2018, and my name is Alejandro Zambrano, Chief Market Analyst with Trade Captain and amanacapital.com. We're going to take a look at the markets as we should do at this time of the day, and hopefully I can show you some key levels and that traders are looking at, and potentially also derive some interesting trading ideas. Before we start though, as always, I need to stress that trading financial markets unfortunately is high risk. You probably notice this on some of the risk disclaimers across Europe and European brokers. About 80% of everybody that trades lose money. So there's definitely high risk of losing money when trading. That's why I'm going to share with you guys my view on the markets, and I've been trading since 2006. And I'm a profitable trader, but it doesn't mean that, just because I think the euro is going to go up or down, that it actually has to work out. The trick behind all of that things is usually to go with the trend, try to get a good risk-reward ratio. Another little simple tip, if you are struggling, is just to trade on bigger time frames. I used to trade a lot of short term. Nowadays I try to trade on breakouts on the daily chart, believe it or not. That's really what has worked really well for me. All right, let's begin. So quickly just glancing over the rates charts here, you can see that there's not a lot happening, but the Australian dollar is down with 0.33%. and the New Zealand dollar is down 0.81%, which is quite a lot for this pair. So it's almost down a full percent. So New Zealand dollar is the biggest loser so far. Gold is a little bit lower, but not too much. And if you continue to go to the downside here, you can see the US futures are down with 0.2%. German DAX is down with 0.73%. So it's not too much either. We quickly take a look at crypto coins. There's not too much happening. IOTA is down with 5.4%. Otherwise, all the other markets are pretty much, I would call this unchanged, because at 2.2% in the crypto is nothing. It's when you get these 10-15% moves that it's really becomes relevant. All right, so this is the euro, and here's your daily chart. And looking just at the daily chart, it's quite obvious to see that we're sitting just below strong resistance, which is 1749, followed by 1794, and then as well you have 1847, and we have not had a strong correction since the market bottomed out at 113. I personally think that it would be foolish to expect too much from the market. You can always go long. We showed you how it was possible to buy from here for this to trade a little bit higher, but it's a bit foolish to try to go with this move when there's so much resistance. On the other hand, if we start to take out some of these levels, in particular if we take out 1794, then yeah, okay, maybe we can target 120, which is up here, and maybe followed by something like 120, I would say just 120, 154, or 122. So take out this range or this section here, and you can open up for a push to the upside. So that's sort of my strategy here. So I did trade on the break to the downside, but I didn't touch this market on the way up. Now, right now, if you're looking to scalp, and then we're still dealing with a short-term uptrend without any doubt. The market is creating these higher and higher lows, so I'd rather be bullish. If someone put a gun into my head, I'd rather be bullish than bearish. And I'm focusing now on this low here. Now this is the low from 7 a.m. in the morning in London time on August 27th. Which is, it's Monday's low. Now, this is not a particularly strong low. This is a strong low. But I'm pushing this to the upside intentionally because I know eventually we're going to be stopped out. And I want to be stopped out as close as possible to the high. And then I'm gonna turn neutral. In fact, you can turn neutral already today. That's what I was trying to allude to from that first talk about the daily chart. But if you want to still go with this short-term flow, then I would be bullish and maybe looking to get involved around the, let me see here, around 1658, and just be bullish above 1594. And then the idea is that we'll risk about 66 pip if we hit the high, maybe 81 pip return. So that is the euro versus the USD. Now here's the pound versus the dollar, and as you might remember, we talked about buying down here. The market though did not move all the way down to what I shared with you guys yesterday, unfortunately. I do several presentations more than this one, so I don't actually remember exactly if I told you guys to buy here, but I do know that I told some guys to buy here and then looking for that pullback. If you missed out or you already cashed out, doesn't matter, of course. Now, what happened here yesterday was an out of the blue comment that was positive, where the EU might offer the UK a deal that has not been offered to any country in the past. That caused the market to move to the upside because Theresa May is trying to get some sort of deal which would allow some sort of frictionless trade of goods, which is really important. The Germans, on the other hand, they comment just an hour or two after that, trying to deny or trying to talk down that whole comment. But the way it looks right now, we might get some sort of a deal, and that pushed things to the upside, and we'll reach that 130 level that we discussed about yesterday. Now, going forward, down here was fine to buy because the risk reward ratio made sense. Up here, the risk reward ratio does not make sense. It doesn't mean that it can't push to the upside, because there's probably people that are short and they are in panic, and they're probably going to say, all right, I'm just going to take my loss. So they will buy back here, and that could lift price to the upside. But if one is not in the market and one wants to take advantage of pound strength, then this is not the time to buy, at least not according to me. We might be sticky here for a day or two, but eventually I think we're going to move to the downside. And I think maybe down here, so around the August high, the actual specific level is the 129.56 level. I suspect traders will probably try to buy, and then they'll attack the high and maybe attack this July 27th low at 130.82. And then we would need to see, usually, I would argue that for a market to turn around, it probably, I mean, we've done this part, right? Now we're doing this part. I would argue that, again, we can do like that, and then up, and then probably down again, and then trade sideways like that, and then we'll see. But this is sort of going to be the new key level, I suspect. And then we'll do like that. We can probably also do something like that, all right? So I think we are in this process, down, up, down, down, up, and then we'll test this whole structure by moving down, and then it will settle here. And then if Brexit news again improve, we might have, you know, a push like that, and then finally turn bullish for the next month or two. But give the macro fundamentals, you know, if we do something like this, it wouldn't surprise me. But I think, again, we have another few more days to the upside. Let's talk about the New Zealand dollar versus the Swissy. No, sorry, New Zealand dollar versus the USD. Now here, unfortunately, I was bullish. Now, we did trade above the high. I even published an article about it. And I said, you know, if you want to, we could have a continuous or more of a correction to the upside. Unfortunately, though, you know, we had some news coming out overnight. I don't know 100% why this actually happened, but I do know for a fact that I said, you know, we could look to be bullish above 66, 67. That's something I shared as a article here. Unfortunately, though, the market didn't work out. It moved to the downside, and now if it bounces up to 67 again, that would not surprise me. But I want to take a step back. When a market is not behaving the way you anticipate it to behave, then it's always good to take at least one day's break or step back until it starts to behave the way you anticipate. So I want to be neutral here, and here, if we break to the downside, I mean, I want to be bearish. In fact, I think we are, this big picture trend is clearly bearish, right? So that's my preference, really. And maybe we'll go up, we go down, and do something like that. And then eventually, when that break happens, I would like to sell, if possible. Yesterday, I took a position in New Zealand dollar versus the Swiss franc. So, looks like this. So this is a 1 hour, 4 hour chart. So there are pockets or pairs where the New Zealand dollar is suffering quite a lot already, and this is one of these where I think the market could move to the downside. I sold at 65.26, profit target at 64, and I think here in the short term, it's definitely oversold, so I would not get involved here. But if it would bounce up to maybe 64.90, 64.80, I think traders will probably look to sell, and they're probably just going to be bearish below this level. I'm going to reduce my stop loss just to this level very soon, so I'll risk 6-7 pip. Okay, let's take a look at Bitcoin now. So this is Bitcoin, and the market is moving to the upside, and I do suspect that this will continue. So in the short term, moving to the upside, we are working with some sort of head and shoulders. You have a head, left, right, shoulder. You have that initial breakout that quickly fizzled out, but we're moving towards that target that this pattern projects, which is 74.18. And if we move back down to these levels, it would not surprise me if this market moves to the upside as well. If I were long, which I'm not, but if I were long on the breakout here, I would reduce key level, stop level to 65.57. This way, we'll have a tiny potential loss of 3.4%, while we should have some sort, at least a gain of maybe 4, and potentially make up to 11%. And that's really important. Try to reduce the stops when possible, when given the opportunity. We are given usually opportunity when the market creates these higher swing lows. This is gold, and gold is also in a downtrend, but I'm suspecting that it might come down and then push to the upside, but then we'll see. My preference at the end of the day, because this overall bearish market, is to be bearish, really. But you can see how this market, clearly, in a very, very steep downtrend, and now more flat, right? And eventually, the more flat it goes, the more interesting does it become to work with a breakout when and if that happens. At the same time, it also becomes more interesting to sell. Actually, if we break today, it's still okay to sell, but that bullish opportunity is better, because this gives time to this just means that the trend has properly turned around more when it's more flat. And with the narrowing of this range, you usually have tighter stop loss orders. Here is Crude, and Crude surprised me actually. Crude pushed to the upside and is trying to take out these highs. I guess it's on the back of stock markets, which are doing really, really well. And I think here the market can continue to move to the upside. I'm not betting on this myself, but the trend is short-term bullish of 68.17 and a little pullback, and we might be able to get away with a risk of about 1.5% versus a potential reward of 1.86, and if it really moves to the upside 72 or 73, then you're looking at maybe 4.25% return or 5.7. So risk reward ratios are there. On the other hand, I think if we trade below here, things will quickly move to the downside like that. German DAX moving to the downside, seeing some profit taking and some stock markets profit taking in general, I would argue. This market though is not to be trusted because of the overall lack of a trend, but it is short-term bullish. The market is now back at that breakout level. It's short-term bullish because the price is creating these higher and higher lows. And I think maybe something like this, but again, and not really my preference. Okay. Good morning, Maurizio. Thank you so much for joining us, and good morning everybody else that is watching or looking at the recording, and maybe afternoon if you're based in places like Australia, Singapore, or any place really in that part of the world where it's a bit later. It's still 9:21 a.m. in London. It's not fully correct up here. It's 9:21 here. Okay, I think we're gonna wrap things up. Don't forget to like the video, and don't forget as well to follow us on Twitter. Here's my handle, AlexFX00, and the Trade Captain handle is TradeCPT. Doesn't cost to be on Twitter, to have a Twitter account. It's a good opportunity to follow the likes of myself, but also follow other people. There are other people that are good traders that relay good information, and it's really nice. I mean, if you think about it, Donald Trump is on Twitter. That gives him the opportunity to directly communicate with anybody and that follows him. And there's other good traders that are on Twitter as well that share information. And as well, I mean, these tweets from Donald Trump, they will usually move the market. So I follow him myself. Here's my Twitter handle. Here's the Trade Captain Twitter handle. I think we're going to wrap things up. I want to thank you so much for joining me. Again, don't forget to like the video as well. Don't forget to like and retweet my videos if you like the stuff. Why? Because it sends signals. It sends signals to what I should focus on. You know, if I see more people are watching this, more people are liking this, I will gravitate towards that. If I see less reaction, I'll do less of it. Very straightforward. Have a great day, guys. Happy trading, and I'll see you guys tomorrow at 7 a.m. London time. Sorry, 9 a.m. Thanks.